And because there has been so much abuse of that strategy, the IRS audit rate for people to use it is significantly higher than a typical tax strategy there. And so, is it legal? Absolutely, when done properly. But just need to know that there's a very good chance that if we execute this, that we're going to get audited. But I'm very intentional that I work with a specialist on this. They have a whole process that they walk through, how they document it there, so that we are taking the steps to protect ourselves, even though this may be a little more risky.
Welcome to the Super Clinic Project Podcast, where we take regular clinic owners and turn them into cash-based multimillionaire entrepreneurs. Warning, if you're a doctor who listens to this podcast regularly, you will make millions of dollars. Do not listen to this podcast unless you want to be a successful clinic owner who helps thousands of patients achieve their health goals and adds more money than you can imagine to your bank account. You've been warned.
Welcome to the Super Clinic Project Podcast, where we take regular clinic owners and we turn them into super clinic owners. I'm your host, Jennifer Gligoric, and today we're learning from CPA and certified tax coach who helps busy owners uncover larger tax savings while reducing the time typically associated with taxes, which we all love, reclaiming our time. He has helped clients identify tens of thousands of dollars in tax savings while providing them an average ROI of 1,800%. So let us welcome the most proactive CPA on the planet, Kyle Beltle, to the show today. Welcome, Kyle. How are you doing?
After that introduction, I'm doing great.
Well,
thank you so much for having me, Jen. That you're too kind.
I love having tax experts and CPAs on the show because that is not my strength. I love learning from it. And I also know what a big deal it is to have not just, most of us, when we get in business, we'll get QuickBooks,
Right.
and even if we're just starting a practice, you get QuickBooks and then you'll have either an accountant. And then some of us will even have a bookkeeper to help with that. But we don't think about getting the tax advice ahead of time and having the tax advice work with the type of business that we're running, which is really what we mean, and many times, like, what's your tax strategy? And then you talk to an owner and they'll just go, So tell me a little bit about why strategy is important and why I said it like that. But from your point of view as a CPA and what you've seen actually in the trenches helping owners.
Yeah, absolutely, Jen. So what I oftentimes will say to people is, imagine you're holding in your hand right now a check for $29,000. What could that $29,000 do for your family, for your business, or for your community? As a tax strategist, I am all about being literally proactive with my clients there to help them not just get to April, look back, and report what the score was. I want to help them influence what the score of the game is going to be. Last year, by working with me, the average client that I had, I was able to put a plan in front of them to help them uncover, on average, $29,000. There, you think about what could that do as a business owner if you need to do hiring or purchase inventory, or what you can do in terms of, reinvesting in your family, whether that's a vacation or whatnot. But
yeah, think about that. That is two for a family of four. That is two pretty decent, nice 7 to maybe 9 day vacations. If you're a good budgeter for that, that's having a pretty good time, right? And that's a decent place to stay. That's excursions and everything else. And for a lot of people who have small businesses, there's like no way you could do that. And I'm even thinking about the salary it would take to replace, to have someone there answering the phone and booking for that week. We're sorry this week, or even if you have to close down but let's get you extra booked, right?
Yeah,
people who think about that ahead of time. Mm-hmm. Yeah, no. So tell us a little bit about that. Like, what is the number one? Well, I know that you have more than that. There are tax saving strategies. Right. So just start talking about some of those strategies that you wish that businesses would learn about, or at least put on their radar.
Absolutely, Jen. So there are 4 strategies that when I start working with someone, these are the low hanging fruit that we want to attack this first. So that is entity selection, qualified business income deduction, pass-through entity tax, and then retirement contributions. And, would you like me to go into a little bit more detail on those, Jen?
But yes, you have the floor now for the rest of the
Awesome.
time. If you just talk about those, I'll shush.
Awesome. So the first one I said entity selection there. So if I'm painting with a broad brush, here in the US, there's essentially 4 different structures that your business can get taxed at. And so it's really important to make sure that the structure you have today still makes sense for you. I'll tell you a quick story here. I had a woman named Emma, and she came to me. She had been in business for a number of years, and she was being taxed as a sole practitioner. And as I was crunching the numbers for her, I was saying, well, yeah, that has worked well for you and you're small and you're growing your business, but you have an established business now. And really, in your case, making an S election, you tax with an S corp, that's going to save you $5,000 a year. And you think about that, Jen, that's not just $5,000 this year. That's $5,000 every year in perpetuity that she can save just by changing her structure. And if she grows her business and expands it, those savings are going to grow. So always want to start with entity selection and just make sure where you're at today still makes sense for how you started out.
Yeah, because a lot of people still start out as a sole proprietor. They won't even get the LLC, and they don't even understand the difference between that. That's still, we still have people doing it, and a lot less today than there used to be. More people are choosing it, but there's still people doing it. Yeah.
And I'll also throw out there, the S Corp gets a lot of love on TikTok, and some people, just based on social media posts, when they start their business, they just get that right away. They don't understand the compliance costs that come along with it. And so sometimes it's actually saying, this is costing you money to do it this way. Let's switch to a better one.
Yeah.
So, entity selection is very important. So the next one, QBI. Jen, would you believe me if I told you that as a business owner, you only have to pay tax on 80% of your profits?
No, because I'm a conspiracy theorist who believes that they're going to tax me on everything from the air that I breathe.
So I'm being a little tongue in cheek here, but the qualified business income deduction is essentially that. For most business owners, they get to take a deduction that equals 20% of their taxable profits there. Now that's up to 20%. It's a rather complicated deduction, and there's a lot of reasons why people may not qualify for that full amount there. So the second thing I always like to do with people is take a look at that, because I'll tell you a quick story. We had a guy who came to our firm to get a quote, and as part of the quoting process, we took a look at last year's return. He had self-prepared his return, and he completely missed that deduction. And for his business, it was $25,000 that he just completely missed taking a deduction on there. So I always, to all the clinic owners out there, all the small business owners there, make sure that A, you're taking that, and you're taking as much as you possibly can. Deduction. The third thing I would like to look at for people is called the pass-through entity tax. Now, this doesn't necessarily apply to everybody. The pass-through entity tax would only be for people who are in a state where there's an income tax charge. So our friends in Florida, you can kind of tune out for a second. Here,
I'm in Texas, so I will tune out. No.
Yeah. Texas, you can tune out there. But for those who are in a state that has an income tax, as you know, up until recently, on your personal return, you were capped at $10,000 that you were able to deduct state and local taxes. With the new Big Beautiful Bill Act, it's going to jump up to 40, but for many business owners, that's still not going to be enough. What the pass-through entity tax allows you to do is have your company pay taxes on the profits it generates. And the reason that that is so amazing, Jen, is that is at the federal level, that becomes a tax deduction there. So you're paying less on the federal side than you would if you just allowed those taxes to flow through your. Recently had a prospect who came to me, and that immediately jumped out in her state. I was able to go back to her and say, hey, there's $15,000 that we can save simply by having your business pay the tax versus waiting until it comes to your return. So take a look at that. And then last but not least, if people are looking for where do I start, how do we get going here, the fourth and final thing I always make sure that we're looking at with people is retirement contributions. I know, not super exciting. Everybody knows about the 401k, but it truly is a very powerful thing, especially for business owners. What I've noticed, Jen, is a lot of business owners aren't aware that you can do within a profit sharing component within your 401k. Basically, what that allows you to do is it allows the business to make contributions into your 401k as an owner, into your employees' 401ks there, and those contributions are tax deductible to the business. I'll tell you one final story here before I wrap up, but
I knew of a solo entrepreneur who had teenage children, and she hired them, and they actually worked for her very part-time, but she set up retirement accounts for them, and she made contributions towards them in those accounts. That was her benefit. And she had a tax strategist, and she was like, well, this will be good for them. They're not going to pull that money. And she made that for them. But, she did that. And she was like, just think, by the time they graduate from college, just getting their job, they'll have this just because I'm doing this right now for them. So it was a tax benefit for her, but then it was a huge benefit for her kids.
You are 100% correct. I actually just did a blog post on this recently about even if you hire your kids in your business when they're, say, 14, 15, and you're only paying them, say, $3,000 a year, if you put 100% of that into a Roth IRA, and they work for you from high school to college, and then go up and do it, even if you just pay them $3,000 a year, I want to say it came out to something like $700,000 or $800,000 that would grow to. If those kids continue contributing to a Roth, they can have like $3 million by the time they hit retirement, just as you started them early to give them that kind of compound. So yeah, absolutely. Using retirement accounts within your business to help your family members would be an incredibly powerful strategy.
Yeah. And it doesn't have, and again, it doesn't have to be much, and you can you're saving the taxes on it, but really the benefits for kids or your staff of doing things like that can be a real big benefit. I was kind of blown away when I was talking to her, and I didn't even realize it could be that much, like you just said. And I'm like, now I'm thinking my son's going to be going off to college, here in 2 weeks. And I'm like, okay, well, he actually helps me a lot. Maybe I need to get a little bit more remote work from that kid as he's going through. Yeah.
And make sure he's when he's home on breaks that he's working for you.
Yeah. Oh no, he does. He does. He's a good worker. He works for his both his dad and I. He's a hard worker. He's a good one. What other little things like that do you think that it's tax planning? Because if you can plan your taxes year round, you can start saving a lot of money, right? And I know that you had talked a little bit about that, so I do want to find out about that as well.
Yeah, absolutely. I'll tell you a really quick story here about the importance of just, being involved with your tax professional year round. I had a guy by the name of Matt. Matt owns a machine shop, and he genuinely needed to purchase equipment, right? He wasn't just going out to spending money to get a tax deduction. So he gives me a call in December and just says, hey, we got to purchase this equipment here. Do you see any reason why I can't go ahead now and purchase that? And I was able to say, yeah, well, would it kill you to wait 3 weeks until we're in the new year? He said, no, I think we could wait. And the reason that I was giving him that counsel was, he and I are here in Pennsylvania. The state laws around state section 179 were actually changing on January 1st that year. And we're going from a limit of 25,000 up to $1 million there. And so just by simply waiting and timing that better there, he was able to get a significantly greater section 179 at the state level to help him recoup some of the spending there on that equipment there. And so there's just a lot of stories like that, Jen, where when people come to me in April and say, oh, by the way, I did ... And I'm like, more often than not, I'm thinking, oh, either I wish we had waited on the timing, wish we had maybe tweaked a little bit of the approach there, because it could have saved you a little bit going on there. So yeah, really important to be in touch with your tax professional year-round.
So when do you think is the best time? Let's say somebody's just starting right now. So it is, I don't know when this will drop. This might even drop around January, but no matter what time you're listening to this, hopefully people will listen to the whole time. But when do you think is the best time to start? If you've never done it before, if you've never really thought about having a tax strategy, it's always been just go to H&R Block or something like that.
Well, Jen, the best time to start planning taxes is on January 1st. There, because things are always happening. But in all seriousness, if your business is on smaller end of things, let's say sub $1 million of sales, there, a lot of times what I'll advise clients is let's set up a meeting in July, because at that point you've got enough time under your belt. I have a sense of what the year is going to look like, how things have gone, but we also still have 6 months ahead of us. That once we come up with your tax plan, we've got time to execute.
So you would say if it's less than 83,000 a month, do it in July. But what if you're well over? We have a lot of clinics that are doing 200,000 to 300,000 a month. That I know that listen to us as well. Do you think it's best if they wait for July or no?
No. Businesses in that size typically should be meeting quarterly.
Okay.
With their tax professional there to stay on top of this and have these discussions.
Mm-hmm. What do you think? What do you think moves the dial the most in terms of what people and again, let's frame this to clinics and service-based, right? What do you think is going to move the dial the most in terms of what questions they need to ask of a tax strategist ahead of time so they can know that they pick like the right person to really get them, what you're talking about, this 1,800% return on investment, which is just astounding that you're able to get.
Yeah, that's a really good question there, Jen. I think it begins with a really thorough sales call, and where both you and the tax strategist really have a chance to talk, to get to know each other, and to get a feel for the personality. I really feel like personality and fit are really, really critical here, because if this person rubs you the wrong way, you're not going to want to deal with them. And working
you're not going to do
it. Yeah. And when they give you advice, you might not follow through on it there. So you want to make sure you've got a really good fit there. You want to see that they have a process in place. So ask them about their process there that they're going to walk you through there. So for example, I have a little graphic that I will show my prospects about how this time of the year we're going to be meeting the planning, this time of the year we're talking, this time of the year I'm preparing your return, and it's a continuous cycle there. I also can show them, I have a questionnaire that I work through with them to make sure that I'm not forgetting to ask them about certain areas of their tax and rate. So you want to make sure that your tax planner has something like that in place. And then last but not least, you want to know what their track record is, right? Ask them to tell you some success stories or provide you with some referrals
Yeah, absolutely. Two, what about being audited? That's like a thing we all want to avoid, like the plague. It's the worst thing in the world. But if people are like, oh God, I think, we're going to be audited or whatever, is it too late to talk to to a CPA and tax strategist at that time? Or can you still get help? Kind of
No,
like, I always think of it like lawyers. Once you're already being sued, you're done, right? Like how half the time they don't want to talk to you. They want to get you proactively, right? Is it the same thing with
yes.
CPAs or no?
No, no, not at all, not at all. In fact, there's accountants who specialize in doing nothing but IRS resolution, it's called.
Oh, okay.
Where people who know that they're in the midst of an audit can come to a CPA, and they have CPA has experience dealing with the IRS to, cut deals and make sure that you're well represented there. But really, Jen, the good news is that the chances of getting audited on average are fairly low. Some of the most recent statistics on this come from a study that the IRS released in 2020, where on average, people have a 0.2% chance of getting audited, right? So for every 1,000 returns, the IRS getting their own picking up too. Now, for those high earners, as you get up to $1 million, 5 million, yes, your chances jump up. People bringing in more than $5 million, their chances jump to about 2% there. But overall, they're very low. But why wait till you're getting audited to engage a professional? Make sure that the tax pro you're working with is well organized and has good record system. Because a lot of times when you get a notice from the IRS, it's simply a matter of bringing up the documentation and saying, hey, this is why we took that position. And, you get the feeling that your, account is completely disorganized and has just more receipts everywhere than you do there. That could be a little bit of a red flag. And then also you just want to make sure that as you're talking about tax strategies with your tax broker, that they're not just telling you how much you can save, but they're also telling you the risk profile of that. A great example there is captive insurance. People aren't familiar with that.
I'm not familiar with that. I'm like, risk profile. Why would there be a risk in saving taxes when the laws are there to help us, right? That's what I initially thought, but
yeah, you're absolutely correct. This with captive insurance, it's essentially you start your own insurance company to self-insure your businesses.
Oh,
and because there has been so much abuse of that strategy, the IRS audit rate when people can use it is significantly higher than a typical tax strategy there. And so, is it legal? Absolutely, when done properly. But just need to know that there's a very good chance that if we execute this, that we're going to get audited. But I'm very intentional that I work with a specialist on this. They have a whole process, they walk through how they document it there, so that we are taking the steps to protect ourselves, even though this may be a little more risky.
okay. Yeah, I wasn't aware of it, but that's very interesting. I always think it when people say, well, how do you prepare an audit? And I was like, well, you just have to save everything, right? That's what I think, but it's a little bit more than that, right?
Absolutely. I mean, especially with a more nuanced position or a subjective position, one thing I will do oftentimes as I'm preparing a return is I'll actually write up a little document. Hey, this is the conversations we had. These are the options we looked at. This is why we're taking this. Here's the IRS code or the court cases to, kind of substantiate that. So that again, God forbid, if we were audited, I've got the receipt. I can show them. And I can also intelligently speak to why we did that there. And 9 out of 10 times when an auditor sees that, they're okay, you're not a fly-by-night operation here, just trying to pull a fast one here. Works out well for the clients.
Yeah, because you really do need an advocate, even if it's just personal. I mean, we only talk to business owners, but I was audited once back in the day, a long time ago, and I was very young. I had decided to get myself a purple it was a purple, what is it, Z28?
Okay.
with the T-tops and all that. And it was more car than I could have handled. And then I got scared to drive it because the engine was so big. Anyway, it ended up getting repoed. I was like in my 20s. And they sold it, right? They ended up selling it. I went to the auction. I was going to try to get it back because I had lost a job and then gotten a job. You know how that is when you're young.
Yeah.
And they sold it. And I had all the paperwork and things like that. I even took pictures of it. And I put it literally all of that in a box, and I dealt with that. Got over it. It was like, didn't really ding me at that time because I was just so young. And but later on, and I'm talking, it was almost 19 years later, I got a notice that I had to pay taxes on that.
What?
Yeah.
19 years.
19 years. And I had to go and provide that paperwork. I actually got someone out of Salt Lake City, Utah, who, because the IRS gives you this option to get someone on your, like, a person to help you. If you need help with this, there are these people that I guess work for the IRS to actually help people, whatever. And I gave it to them. They're like, I can't even believe we're doing this. But it was that that debt had been sold before, I guess, and sold and oversold and sold so many times. So like 15 companies had it as a debt. And then the original GM company said, well, we are going to, I guess when they did that, they were going to use that as a loss against whatever their taxes were and their tax time. But they'd actually made money on it. They made more than what was owed on it. And because I went to the auction, I had all the information and stuff like that of what had happened and could prove it. It went in my favor, and I got money.
Good. That's a great story. I'm sure it wasn't pleasant at the time.
No, it was it was horrifying at the time. I was scared to death. It was like it came out of the blue, literally like 19. You'd think that that's impossible. Isn't there like a 7-year limit? But no, there really is. It isn't.
Yeah, I'm so really surprised to hear that.
Yeah, no, the IRS does whatever they want to do. It is kind of scary. So I'm going to tell you, keep everything, keep it in the cloud, take pictures of it, do it what you got to do with it. And that's another thing too, when we talk about taxes. I was talking to someone, and now they were a smaller business, and they were an LLC, and they were like, oh, this way, I just need to make sure I get a big refund. Right. And I'm like, oh yeah. And I'm like, why? Well, wouldn't you rather use that capital when you needed the capital, right? So you had talked about this, why you don't want a large tax refund. So I want you to say it in your words, right?
Yeah, you're absolutely correct. And so many people judge the quality of their tax account by the size or the lack thereof of a refund, right? And honestly, I am not a fan of tax refunds, of massive tax refunds, because I get it. It feels great when you're looking at that money hit your bank account until you realize what it really means. It means that you've been overpaying all year long and have given a 0 interest loan to the IRS, and now they're just giving it back there.
Yeah.
And here's a great story. I started working with a woman named Jessica at the beginning of 2024. And she owns a clothing store and employed a number of people within her store. And she was using a traditional tax preparer who had just kind of given her estimated payments when they filed the 23 return, and then never checked in on her again. And so she just did what she was told to do. She mailed in her estimated payments every quarter. Well, the business actually declined that year. She had a much lower tax liability than she had the prior year. And when I was preparing the return for her now, she ended up getting $100,000 refund. And again, back to kind of my opening illustration, what could she have done during the year in terms of hiring more staff, of
advertising,
advertising, taking her family on a trip to Disney World there, rather than kind of playing bank to the IRS.
While feeling the entire time that she's doing poorly, losing money, whatever, when that money could have been reinvested in the business. It could have, upgraded equipment. There's like a million things that would have been so much better
Yes. Yeah. Do not cheat yourself by getting a large refund. Make sure that if you're a business owner, you're looking at those quarterlies and making sure that they make sense every quarter.
Well, guys, we've been talking to Kyle Beltle, and it's about coming to the end. I know that it went really quick, but Kyle, let people know how they reach out to you.
Yeah, so the best way to connect with me is on my website, Proactive CPA Co. That's Proactive CPA.co. I have a blog on there, which I post tips regularly. I'm also very active on LinkedIn, and there's links on my site to my profile on LinkedIn where we can connect. And then if you'd like to talk more about your situation, there's a link to my calendar, and you can book a discovery call with me.
And guys, that's it. I hope you have a super clinic week. Be sure to like, follow, and share, and go to superclinic.com and you can give us a 5-star review, or superclinicproject.com. And if you do want to talk to us too, you just click on my picture and you can have a 15-minute session with me. I can help you blaze through anything, or if you want a personal introduction to Kyle, I'm happy to do that as well. Just let me know. But thank you so much, Kyle, for being here this week, and I hope everybody has a great Super Clinic week.
You've been listening to the Super Clinic Project Podcast. If you like what you hear, subscribe and stay tuned for further episodes of the Super Clinic Project Podcast.